Hey guys, FutureMeDead here with a video explaining my recent trade that I posted on Twitter with regards to this foreign exchange pair, looking at the British pound versus the Japanese yen. This is an educational video just kind of explaining my thought process of this trade. So when I first pulled up this chart earlier today, I think I was in the 4-hour time frame, and I was looking at this parabolic move here. This we're talking about over 1,000 pips here since October 13, I guess. October 15, excuse me. So clearly the trend is up, but whenever you have something this parabolic, sometimes there are sharp retracements to the downside, and I want to see the possibility of maybe scalping or taking on a quick trade to the downside, considering that this red candle was exhibiting somewhat of a reversal. So I zoomed in into the smaller time frames. And the reason I zoom in into the smaller time frames is simply because in the larger time frames, even the smallest move, can represent 100, 200 pip moves, and that's way too volatile for me. So I actually had to zoom in all the way into the 1 minute chart, where every bar, every candle represents a minute of time. So the first thing I looked at was from the very top to the bottom, is that this is impulsive enough for me. The count is not 100% clear. I could count it, but without getting too crazy, I just want to say that it's not unreasonable to count this as impulsive. So if I'm assuming, moving forward, assuming that this decline is an impulse wave, well, I know the corrections can never be just a simple impulse wave. That means it's only the first leg of a larger correction. I don't know if this was going to be a wave 1 or if this was going to be a wave A. Either way, it didn't matter. I knew that another leg to the downside, where this low would be broken, would be a requirement. So the next thing I looked at was, well, if this is an impulse wave, which means the short-term trend is down, I expect a 3-wave move counter trend, in this case to the upside. And we certainly have that here. Okay, I will say, this is all in my thought process. I'm not trading any of this at this time. I'm hunting for the trade. So these are the first things I look for. I look for an impulse wave to the downside to identify trend. Immediately I'm looking for evidence whether a short position makes sense here. The second thing I'm looking for is for this 3-wave move, to terminate somewhere near the 61.8% of this first decline here. So the first thing I did was pull up my fib and draw out the length of this decline. And you can see this 3-wave move, we have a small double top at the 61.8% retracement, which is the most common stopping point for second waves. So that's a great thing. To compound this, I wanted to see the relationship between this leg and this leg. So I pulled up my Fibonacci projection tool, draw out the length of the first leg, and extend it from the bottom of this B wave. You can see this is a 3-wave move here. And lo and behold, this wave C here is 61.8%, the length of this first rally here. So we have an A, B, C, where wave C and A have a Fibonacci relationship. Well, that's great. So this is the ideal shorting point. Unfortunately, when I pulled up this chart, this had already passed. I was already seeing this. Price action was around 182.10. So I still hadn't initiated my trade. What I then reached for was my trend line tool, because trend lines are powerful. They're simple yet powerful. I was connecting this bottom here. I like to connect bottoms and tops, in order to try and find a channel or support and resistance. In this case, I wanted to connect this bottom to this bottom and extend it forward. And I was looking at this price here, and I could see that, clearly this trend line, while steep, was providing support, but it gave way. Okay, this was enough for me. So I had 3 things that led me to enter the trade. I had an impulsive decline. I had a 3-wave rally that stopped at the 61.8% retracement, and then I had a breakdown of a trend line that was once providing support. So I went ahead and entered the trade at 182.10. with a stop at 182.40. Let me explain that stop. Elliott wave will tell you that second waves can retrace up to 100% of wave 1. But if the correction is deep, say 78.6% or higher, there's a good chance that this top is not going to hold and it's going to go higher. So sometimes you don't need to wait for wave count invalidation. You can actually put your stop a little bit lower and lower your risk. So in this case, 182.40 was far enough for me, yet close enough to wave count invalidation for my comfort level. So, if you're not sure, then, go ahead and put your stop at wave count invalidation where 100% you're wrong. But, if you're a little more comfortable and you're watching, you're on top of this trade, then you can lower your risk. So that's what I went ahead and did at 182.40. Once this trade started to go our way and go lower, the prudent thing to do is not to take profits because we don't know whether we're right or wrong yet. So instead, what we want to do is risk management. Risk management first. I tweeted we should lower the stop from 182.40 to break even at 182.10. I think I had 20 or 30 pips of gain that I was willing to risk in order for it's a free trade at that point, so you risk your small gain in order to stay in the game. So you can see that here. Whoops. Let's go to here was the first tweet. Shorting this currency pair, tight stop at 182.40. Once I had a 20 pip gain, it's prudent to lower your stop loss to break even. There's really no such thing as a crystal ball, and even though my analysis is working, it doesn't mean it's gonna hold forever. So if it's a free trade, that's what I'm looking for. Once it starts going lower, what am I looking for? I'm looking for a price structure that I'm expecting. Well, what do we get? We got an impulse wave to the downside. Okay, once I have a 5-wave impulse wave to the downside, which may be a wave C to complete an A, B, C correction, I'm expecting at least a 3-wave move counter trend and in the wrong direction. Since I'm short, I'm expecting a 3-wave move to the upside. So at that point, that's enough for me to close my trade, to close my short. So I exited right around 181.70. You can see that here. Closing the trade at 181.69 for a gain of 40. Okay, that's it for me. It was simple. That was the trade setup. I saw a sharp move down, 3-wave counter trend move that had Fibonacci relationship with regards to phi, the 0.618 ratio. A third leg that was impulsive. That's it for me. This should go higher. And remember, at the end of the day, even though I'm shorting this, it's a counter trend trade because let's not forget where the real momentum is. The real momentum is to the upside. I don't want to get caught shorting this. You don't get in front of a train. This is the opposite. You guys have heard the saying, don't catch a falling knife. Well, this is exactly the same thing, but in the opposite direction. Let this top out on its own. Don't play hero. So again, 1 minute chart, counter trend trade, but in the smaller time frames, it was prudent to take a very low risk, high reward trade setup here, where we're risking initially 30 pips or so. Once it starts to go our way, we bring the stop to break even. Once we count a completed impulse wave, we exit the trade. That's it. And sure enough, you can see this here. It's starting to go up, and even impulsively all that. This could easily be a 1, 2, 3, 4, and 5 when we go higher. Again, the larger trend is up, and I don't want to be fighting that. So hopefully this helps. My idea is to educate. My idea is to be right and wrong publicly. If you guys have any questions, follow me at FutureMeDead on Twitter. Good luck.